Turning up the noise. I don't know if it makes a difference, but I just forgot to do that. February 11th, 2025. Today was essentially a spike, a pullback, and a bull channel day. And if you were watching my video yesterday, you'll notice that I talk a lot about tight channels that need a second leg. Today we had a tight channel and it needed a second leg. So that's really the basis for a lot of, if you're trying to trade always in, you're trying to be a swing trader. That's the premise for most of trading, is find the tight channel, find what needs a second leg and go find a way to capture that second leg. And if you're somebody who's newer to Al Brooks, the easiest way to do that is find tight channels like this. And whenever the pullback happens, then you look for the second leg because it's going to be more tradable, right? You can look for the second leg from 34, 35, and 36. There's nothing wrong with that. It should get a second leg. However, it's just more tradable if you're looking for some sort of higher time frame second leg, essentially. So if you're going to use a higher time frame, I would personally recommend the 15-minute. And all you should do is look for streaks on the higher time frame, like 4 or 5, 6 bull bars, whatever, and then find a way to get in to capture that second leg back up to that high. That's the easiest way to become successful at day trading with Al Brooks' particular methods. Bar 1, a bull bar closing somewhat near its high. The issue with 1 is that the bar 3 low, the issue for the bears is that we got a big gap down, but now we went back to the low where we recrossed the low of bar 3. Bar 3 low is important because it's yesterday's low. So the bears wanted a gap below the low of yesterday and a big follow through bar causing an open gap, and they did not end up getting it. 2 is consecutive bull bars. We should go at least a little bit higher. 3 straight bull bars, 1, 2, and 3. A large tail on the top and the bottom of 3. And then 4 is a bear reversal bar closing near its low. It's not really worth selling. I think if anything, it's a buy the close bar after 1, 2, and 3. The gap down might need a second leg, but it's difficult to tell at this point because this looks like a trading range, and it looks like we're in the bottom of a trading range. 5, a bull bar, but a large tail on the top. You can see it's testing up around the bar too high, so there's probably sellers somewhere up in this area. 6, an inside bar, so we have an IOI pattern, really just a breakout mode pattern is what's important here. And then a big outside down bar on 7. A large tail on the top, meaning it was a big bull bar at some point. So at some point, we might have to rally back up to the high of bar 7 to rescue the bulls who bought somewhere up here. Because on a lower time frame, this is a big bull bar closing near its high. I'll show you. So we have a large bull bar here, and you can see there's a large tail on the top. There's some time frame though where the bar closes on its high. The important thing to know is it might need a second leg. If you're going to concern yourself with, and again, so I'm not really endorsing trade 8, bar 8. I'll explain why in a minute. You can take it, but you have to understand what you're taking. But I think that your time is better spent. Just stare at a 15-minute chart and figure out what needs the second leg, and then find a way to get in on whatever it is that needs a second leg. Should just be your only goal. The problem is people try to spend so much time, opening reversals, this pattern, that pattern, that pattern. Al's encyclopedia has thousands of patterns, and I've gone through most of them. It's a lot, but the problem is it's a lot, and you're trying to master too much. So, if you forget the pattern a little bit and just focus on what needs a second leg, you're going to be successful a lot faster. The reason I'm not huge on trade 8 is because you're buying in the middle of a tight trading range. However, you can take it as an opening reversal trade if you are somebody who wants to trade opening reversals. The thing is, you cannot take this trade if you scalped out. You can't trade in tight trading ranges for scalps. It's just going to go very poorly over time. So if you're buying them of 8, that's totally cool. But you need to go for 2, 3 times, probably 3 times your risk on that trade. Or you can just hold in an always in mentality. You need 3 times your risk is 19.5 points. So you got 19. Or you could exit below 18, right? The first bear bar that needs a second leg. Study second legs. What needs a second leg? So you can buy above 8, but you just can't buy above 8 and then scalp out on the close of 11 or scalp out above the high of 7. You have to hold and go for a swing. And sometimes it's not fun to do when you're sitting there on a large open profit, but that's trading. I mean, if you're going to take a low probability trade, you have to be willing to hold the trade for a swing, because the reality is a lot of times if you take these opening reversals, if you're someone who takes them every day, you probably lose a lot of them, which is fine. It's totally okay if you lose a lot of them. There's no problem with that. It's just that you have to hold the winners. That's the essence of swing trading. 9, disappointing follow through, a doji bar, a bear doji bar, tails on both sides. 10, a bull bar, a large tail on the top. Not great follow through for the swing trade, but it's a swing trade that happens sometimes. This isn't one where you need immediate fast follow through. 11, a bull bar, but a large tail on the top and the bottom. We're probably going at least a little bit higher, but I'm not sure how much higher. 12, a big bull follow through bar, a large tail on the top. I think, we're closing above the bar 7 high, and we're closing above the moving average. I think we're going higher ultimately, but we might pull back first. 13, an inside bar, a low 1 short, a bad sell signal bar. It's a high 1 buy, so you can buy above that high. 14, consecutive bull bars. You can buy above 14 or 15. You can buy pretty much any bull bar when we're always in long. 16, another big bull bar closing near its high. Follow through on 17. Good for the bulls. 4 bar micro channel, yes, but really, really high up in the range. We already have 1, 2, 3-ish legs up. So it's kind of difficult to look to buy up here. You probably have to be expecting that we're going to go a little more sideways. 18, a big bear bar closing near its low. I would exit longs below 18. It's going to need a second leg sideways down. So even if you are planning to hold long, you're going to get another chance to get back in after a second leg down. 19, consecutive bear bars, but not really all that great to be selling this close because the channel up was so large. 20, and then just a bull bar, disappointment if you sold the close of 18 or 19. 21, some bears buy back shorts, and inside bar high 1. 22, consecutive bull bars. I wouldn't trade in any of this. I can talk through all these bars, but it's not helpful. What you need to know, what you actually need to know. I'm going to try and start being better, in these reviews, probably make them shorter, but about what you actually needed to know and learn about the day. Because the problem is a lot of people get caught up in the micro analysis and they lose sight of the bigger picture, which is what actually matters. So when you get this rally, this whole rally, I'm going to say it again, it's going to get a second leg. You don't know when it's going to get the second leg. But your only job, once you see 18, you should exit below 18 because 18 needs a second leg. Your only job is to try and catch the second leg from this sharp rally up. Again, this rally down, or a sell-off down might need a second leg, but ultimately this is much stronger. So, and you could argue that the Bears got their second leg here, but ultimately this is the much stronger move. So you have to expect this to get a second leg up. I'm kind of just going to turn this into a leg counting video in a way. So we start to go sideways, right? And do you want to buy above 26? No, it's a tight trading range. I don't really want to buy in the middle of a tight trading range. What I'm looking for is either 3 legs down. Again, when you get a move up that's 8 through 17, you're looking for a second leg similar in size, something from the open of 8 maybe to the close of 17. And this is the thing that takes a lot of traders forever to understand, is that a 7 bar pullback is not enough for a rally this large. For a 10 bar rally, you probably want a 20 bar pullback. For something that's this large, you probably want a even larger pullback. In general, if you're going to get a really tight channel like this, anytime you get something, I'll prove it to you. Anytime you get something like this, bar 5 through bar 15, or sorry, bar 16. That's essentially a 12 bar rally. You probably want a 24 bar pullback. Okay, so we got 19, 18, 19 bars. That's close enough, right? So over here, you get I should have started it from 8. You get a 10 bar pullback, and you probably want, 10 bar rally, you probably want a 20 bar pullback. And then you can see the second leg starts here, 17 bars in. It's not always going to be even. But the thing you need to keep in mind is if you get a 10 bar rally that covers this much distance, and then 5 bars later, you're looking to buy, you're doing something wrong. If you bought anything in here, it's fine, by the way. We all do. I've done I've walked into more walls in trading than you have, I promise you. But when you get something like this, you have to expect that it's going to get a deeper pullback. And so what about this? What about these 4 bars? Well, what's 2 times 4? It's 8. What do you know? We get a 7, 8 bar pullback and then start to rally, and then we get that second leg. This, obviously, late in the day, it's 3 legs up. 1, 2, 3. So it's a little bit less likely that we get a good looking second leg. But if you learn about leg counting, learning to count these legs 1, 2, 3, you'll know that it's not really as great of an entry anywhere in here. And the even better part is that you have 3 or 4 bar rally here. You could argue it's a 6 bar rally, but because of the doji. So let's argue it's a 6 bar rally. So you should get a 12 bar pullback, 9, 10, 11, 12. Well, there's no good bull bar closing near tie for you to buy on a stop order. And if you're trading Al Brooks, you should be looking to use stop orders. So the thing I want to highlight is basically, forget today, forget the whole video. I don't want to make a daily review. I'm just going to turn this into a leg counting video. Essentially a leg counting video. So if you are looking to trade Al, the most effective way to trade Al Brooks, what you should be looking for is a first leg and then a pullback about twice the size and then a stop order in your direction. That's the fastest way for you to make money, trading Al Brooks. Everyone wants to trade on limit orders. It's natural because limit orders offer less risk. And the problem with stop orders is they usually pull back. I don't want to, and people don't want to sit through pullbacks because they don't want to be down any money at any point, which is obviously unrealistic. But I think the important thing for you to realize is when you have a first leg and you get a pullback that is twice the amount of bars, roughly, something along those lines, you're going to end up getting the second leg. And the tighter the channel is, the more likely it's going to get a second leg. The stronger the move, the more likely it's going to get a second leg. If we're early in the day and you get a large move like this, and then you get this still probably needs a second leg, but the first move is more likely to get the better looking second leg. So you get a rally from 5 to 16. In my mind, this is all a pullback until we break out below the bar 5 low. So for me, all I see here is a pullback from this rally until we get consecutive bear bars closing below the bar 5 low. If we're not getting consecutive bear bars closing below the bar 5 low, and we start to reverse up after a roughly double, right? 16 or 10 bars, 20 bar, 20, so 10 bars up, maybe 20 bars down, and we start to reverse up and get a stop order, essentially a higher low. I'm looking to buy on a stop order above a bull bar. Over here, until we get a breakout, consecutive bear bars closing below what? Take a guess. The bar 8 low. If you said that, that's correct. This is just a pullback to me until we get consecutive bear bars closing below here. Then you can start, it's not to say you can't sell any of these. You absolutely can. But if you're taking shorts in here, you can't lose sight of this. The problem that people have is they'll sell, the close of 29 and 30 and sell more in 31, which is good. You did a good job if you did that. There's nothing wrong with selling below 29. The problem, though, is that they'll sell below 29 and think they're going to make 50 points. Some traders will sell below 29 and think they're going to get, a measured move down to like here or something. And that's just unrealistic. If you're selling below 29, it's a good trade, but you have to keep in mind that this is still in control of the day. So until we break strongly below here, this is in control of the day. And then you see 34 creating that higher low, and you have to be thinking to yourself, oh, well, this could be the start of the second bull leg because we did not get below this low. So, I'm just going to make, I realize I say this in every video, and I'm probably just going to keep making the same video over and over again. But when you have a tight channel, it's a breakout on a higher time frame. That's such an important thing to understand. This tight channel up is a breakout on a higher time frame. And if you're going to be buying, you want to look to buy after the deep pullback. Again, let's look at a 10-minute chart. I want to find the time frame where it looks perfect to illustrate. There it is. The 10-minute chart, 3 really strong bull bars. So if you were selling that bar 30 close, 29, if you were selling this close, selling. We're selling essentially around the close of this bar, which again, there's nothing wrong with being short there, but you just have to realize it's minor. And if you saw these 3 bull bars, you would still think they're in control until bears get a strong breakout below. And then obviously we get the reversal up and 3 legs up. Spike, pullback, and then bull channel, 1, 2, 3. So, what needed a second leg on this chart is a more productive way to do a daily review is what needed a second leg on this chart. I think this needed a second leg. And then the bulls who are buying for any reason will get up below 18 because 18 will need a second leg. 24 is the second leg from 18. So it looks like a bull flag until we get a breakout below on 28 and 29. And then obviously 28 and 29 needs the second leg, right? We get a deep pullback, and then this for the bears is their second leg down because this higher low is a big issue for these bears because it shows the bulls are still in control. Had we gotten a lower low, let's say that we had this big rally and then we got a sell off and got a lower low and then a reversal started up, it wouldn't be as strong. But the fact that we're getting a higher low is extremely, extremely important. This is the second leg for the bears from here, and now the bulls are free to get their second leg. I think this needs a second leg. So we have multiple things for the bulls. If you're looking to buy in this area, we have this needs a second leg. This needs a second leg. This rally needs a second leg. So doesn't mean you have to buy the close of 51 and just hold through the pullback. It means you can start buying bull bars when we start to rally back up. So if the most important thing for you that you can do is figure out what needs a second leg and just trade based on that. And you're going to screw it up. That's the other thing that's completely inevitable. The only reason it takes a lot of people 7-8 years instead of 3 years, because everyone wants it to take 3 years, but I think there's also if you look at it, he says the exceptional few, for the very, very exceptional few, it'll take 2 to 3 years. For most, it'll take 6 to 8 years. And everyone thinks they're part of the exceptional few. But even just becoming a profitable trader, you're already part of the extremely exceptional few. If you're even making it into the realm of traders who are profitable, you're already part of a wildly elite group of people if you're able to trade for a living. So to think that you're going to be one of the exceptional people among the extraordinarily exceptional people is just kind of arrogant. But I'm only saying that because I was extraordinarily arrogant in how fast I thought I was going to learn how to trade, how to be a day trader. And it's taken me way longer than I ever thought it would, which is, that's just trading for you. But the moral of the story is, I think that had I, if I could go back to my first year of trading and just smack myself on the head every day and say, figure out what needs a second leg and trade that. Figure out what needs a second leg and trade that. Figure out what needs a second leg and find a way to enter. It's not about the entry. It's about learning how to see what needs a second leg, and the entry will come as it naturally does. So that, this video was a daily review, but I ended up kind of just changing it up a little bit. But just trade whatever is going to need a second leg. That is your path to success, and you're going to screw it up. It's not going to work tomorrow. It's not going to work the day after that. It's not going to work the day after that either. It's going to take you probably a couple of years to really, really get good at it. But if you just spend your time trying to master every pattern, then you're guaranteeing that it's going to take 7 to 8 years. You're absolutely guaranteeing yourself a 7-8 year journey if you do it that way. If you do it the way of just trying to focus on what needs a second leg and how to capture it, you can probably cut your learning curve in half. But it's really hard for people to do that because they don't figure out, they try to trade what needs a second leg, and 2 months in, they're not making money yet. And so then they just move on to the next thing. And then, 9 months later, they haven't figured anything out. But if they had stuck with that one thing, those 9 months later, they would be doing very well. And I'm very, guilty of this too. I've done this. I'm only telling you guys this because I've done it so many times, but yeah, that's really just going to be it for this video.